Even after this magnificent move from the NASDAQ, I think tech's got more upside. I really do. And let me give you some reasons. First off, I used to write obituaries for the Tallahassee Democrat, the LA Herald Examiner. Every bit of the commentary I heard last week about these growth stocks and their cloud acolytes were finished. You know what? It's just like the subjects of my obituaries. A blue wave was going to sweep Congress. A more liberal Congress would forcibly break up and regulate big tech, hobbling them worse. Worse than Kathy Bates breaking James Caan's ankles in that fabulous scene of Misery. We were supposed to get endless antitrust hearings about those companies. They were too powerful. Show trials, star chambers, darkness at noon. Oh, that's off the table. Now, there may be some poorly attended hearings, but the only thing they'll produce is some mean rhetoric. Right now, big tech is ascendant after Silicon Valley's huge victory with Proposition 22 in California, the one that allows Uber and Lyft to keep operating unimpeded by the state legislature. Yes, the gig economy triumphs. Second, I think we will get some sort of stimulus bill, but it won't be big enough to offset all the job losses that are coming in the hospitality industry with COVID cases back to hitting new highs. Now, that is unfortunate. In real life, it's unfortunate. But it is great for the growth stocks I'm talking about because it makes the beaten down cyclicals even less attractive, as they won't be aided by a generous federal spending package that would cause the economy to accelerate. Big tech doesn't want a red-hot economy. It wants an okay economy where companies are hired to digitize to stay competitive. On the other hand, a Biden administration, you'll be less draconian on immigration. Now, I know that's going to be very unpopular with some people in the audience, but that's what's going to happen. You know what happens when you have a lot of immigration? It's great for housing. I predict one more surge for the home builders, especially since mortgage rates are still low. Third, the drug stocks and health insurers have nothing to fear from a Biden White House and a divided Congress. In fact, I wouldn't be surprised if United Health, Humana, and Cigna end up getting showered in Obamacare subsidies. More on that later, too. And by the way, those are still stocks to buy, even after their gains today. Now, again, we don't know for sure who will win this thing. It hasn't even been called, even if it's looking good for Biden at the moment. However, I think the electorate has spoken. And whatever way this thing goes, there will be a peaceful transfer of power. Hey, that means no lunacy, no White House bunker with a huddled, harried, American-style junta that refuses the verdict. No fighting in the war room. There are plenty of challenges coming, but they'll be settled in court, not the streets. That alone is enough to keep propelling this market higher. Bottom line, finally we can stop fretting about politics and start focusing on business and your money again. Because a divided Congress and a blue White House, well, that's called nirvana for growth stocks. As for value stocks, sometimes they're value traps. Other than the automakers, yeah, I'm actually giving them the high sign. Can you imagine the automakers? I say avoid the beaten down cyclicals. This is not the market for them. It's the market for you.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.